This morning. Joining me now is he's Eyenyen. He's a financial analyst, and we're looking at the Capital Market Probe, where the ad hoc committee of the House of Reps will be talking to stakeholders to find out the immediate and remote causes of the near collapse of the capital market of 2008. But before that, let's quickly play you a quick report that captured some of the presentations that were made yesterday.
Thank you. I will be seated. Thank you.
Once again, investors, operators, and regulators of the Nigerian capital market gather at the House of Representatives.
Thank you very much.
This is the second attempt by the House of Representatives to investigate the near collapse of the capital market. An investigation the House says it intends to get right.
We have come full circle, and we are right where we started. I want us, for the sake of Nigeria, to put whatever has happened behind us. This is a new beginning.
We are not here to play the blame game or witch hunt anybody. However, it is important to know what brought us to this sorry state, and where mistakes were made or outright frauds committed. They must be admitted and rectified in order to restore confidence.
Most of the presentations made identified the global economic crisis, the unchecked activities of most banks, and weak regulatory supervision as key factors that led to the near collapse of the capital market. The discussion also touched on some recent policies that have implications for the Nigerian economy.
The cashless economy, whether it will affect the economy negatively or positively. If I'm to start from conclusion, I will say it will affect the economy very negatively. Cashless economy, what is the level of our economy? What is the structure of our economy? What is the impact on liquidity forecasting?
He also touched on the state of the country's banks.
We all know that the banks are in trouble. The interest rate is rising. It's out of control. The banks are not lending. Why are they not lending? They have not seen a profitable place to put the money. They have not been able to clear the uncertainty surrounding the volume of bad loans.
The need for proper monitoring and enforcement was identified as necessary for the resuscitation of the capital market, as well as some other critical policies.
If there are enough monitoring and enforcement mechanisms to ensure that when people abuse the markets, they really get locked up and the key gets thrown away, I think things will change. But as long as it's a pat on the back, it's what's it now? There's a lovely word that we use here. Plea bargaining. Plea bargaining didn't start in Nigeria, but this is not the way it's done in the other markets.
That these companies, they are making money from Nigerians. Is it necessary for you to allow the Nigerians who are making money from to be part owners of that same company? If it is necessary, why would you want to deny them? There are people keeping you in business. So an MTN that is making millions of dollars out of Nigeria, why would you not want the same Nigerians to be shareholders, to benefit from the money you are making from them?
This hearing is to last for 7 days, and the committee says it will do its best to ensure that this investigation marks the beginning of the turnaround of the capital market. Lanre Lasisi, Channels Television News.
Welcome back. You just saw some of the presentations that were made yesterday at the first hearing of the Capital Market Probe. Now, Ehis Eyenyen is here to look at that particular, those events that happened yesterday at that particular hearing. Thank you so much, Ehis, for being here. Now, like one of the members said, it's a new beginning. It's a fresh start. Unlike what we saw from the previous probe that was disbanded, it's not going to take on an adversarial. I'm quoting him now, Mr. Femi Gbajabiamila. He said it's not going to take an adversarial approach this time, and this time they will be seeking to find out what exactly happened, and then moving forward, find solutions, as it were. Give us your thoughts on this first day of the hearing.
I think the first day is commendable. I think clearly you can see much more maturity on the parts of the leader of Mr. Ibrahim El Sudi. I mean, the way Herman Hembe led the last probe, it was clearly immature. With due respect to him, it was immature, it was unprofessional. And you could see that he didn't have it together. And even though, the DG of SEC was also emotional, maybe one can understand been emotional when she was taken on. But clearly, it was an embarrassment to see that the House committee would carry out such a probe in such a an absurd manner. So it's commendable, and it's reassuring to see that the approach yesterday was focused. It was well, so far objective, and we can say that by calling people to make presentations before you even put the SEC-DG caller to make a presentation, I mean, that's the way to go. So I hope that this will lead to something positive for the capital market. Even though I must add that when the probe is called probe into the near collapse of the capital market.
That's the term we're hearing now.
Yeah, I find that term a bit a bit funny, because you see, what has happened in the Nigerian capital market, the truth is that it's not peculiar to Nigeria. If you look at capital markets worldwide, in fact, the depreciation in the market capitalization we've seen since 2008 to date is in many respects akin to what you are seeing in Egypt, what you are seeing in other emerging markets. So there's really nothing peculiar that has happened. I know today we see that the market capitalization is about 6.6 trillion naira, whereas in 2007 or so, we saw a high of about 14 trillion. So one can understand the concern. But to say there's a near collapse, you see, markets, they go in circles. It's a boom bust thing. And the funny thing is that because we had a boom for such a long time, which was really a pump, which was engineered and
artificial,
it was a balloon. The bubble burst, and people are like, people expected a recovery. We're not recovering in the sense of going back to those days. I'm not sure whether we will get back to those kind of figures we saw, in 2007, 2008, because they were not real.
Do you think that perhaps that should be the focus? Not when we hear phrases like near collapsed or why the market collapsed. It wasn't, like you said, the Lehman Brothers of 2008, where it all started from the US.
Yeah.
So I guess what the members, or do you think what the members should be focusing on is not when they use phrases like near collapse, is finding out why in terms of recovery, while other markets have or making a significant recovery, as I list out every morning, why the Nigerian market is not moving in tandem, especially since we're an emerging market, a frontier market as we're usually called. We're not moving in tandem in terms of recovery with other markets.
Yes, they should focus on the fundamentals. They should focus on, are there any particular reasons why our market is the kind of recovery we're expecting hasn't happened? I mean, has anything happened by way of improving investor confidence? The access to the liquidity of the market, is it like, what can be done to improve all that? They should focus on that. Then look, this issue of also seeing how to deepen the markets, and the issue of regulation. So are there areas where the SEC ought to improve on its regulation? So those are issues that I expect that should be thrown up and discussed. And then the impact of maybe corporations like the AMCON, what impact has AMCON had. And yesterday, Dr. Godwin raised the issue of what he called the opacity of AMCON's operation. So we need to see a lot more transparency, because a lot of questions have been asked. For instance, with regard to the kind of deal structures we saw for banks like Union Bank, FinBank, and some other banks, and questions are being raised. Maybe those issues. I mean, it's good. You see, we're in democracy, and it's good when you can raise questions and get answers. Unfortunately, there's this overhang in our system on account of the militarization of the economy and our policy for such a long time. Government agencies and government officials tend to be very secretive and very opaque in the way they carry about their business. There's something special to it. So so the kind of openness that this kind of hearing is affording is commendable, and I hope that it remains focused, and that within the next remaining 4 days we'll see something constructive that will help the market.
Now, one of the things the members did yesterday, something the previous House or committee rather didn't do. A list of persons were summoned by the committee. We have a list of that now. If we could just have that right now on the screen to see a list of persons that were summoned by the committee yesterday. We have the former CBN Governor, Mr. Charles Soludo, Professor Ndi Okereke Onyike, the former Director General of the NSC, Musa Al-Faki, the former Director General of the NSC also, because many people had been arguing that, while the new current SEC-DG is being questioned, she wasn't there when, the whole thing actually, went burst, as it were. and that the people who were there, not that they are the ones who caused it or in any way, but they also should have an input or be spoken to. We also have a former bank MDs on that particular list. So we have Cecilia Ibru from the former Oceanic Bank, Mr. Erastus Akingbola, a former MD of Intercontinental Bank, well now merged with Access Bank, Mr. Francis Atuche of former bank PHB, nationalized, and now Keystone Bank, and we have Mr. Bath Ebong, the former CEO of Union Bank. Now, what kind of input do you expect? What should we be expecting when these people come before the panel?
If I, like you rightly said, the era we are discussing, which is we're only suffering the consequences of what happened in the era 2007, 2008. The key players are the people that you mentioned. The CBN governor then was Professor Soludo. Professor Indio Koreke was the DG of NSE. Al-Faki was the DG of SEC. And, you know, that era, what characterized that era was the issue of the fact that we saw a lot of insider dealing. We saw, you know, IPOs being done and then prices being engineered to move. They call it, you know, pumping. They just pump and dump. You know, we saw a lot of that happening. And if you saw the presentation that Arumna Ote made to the previous committee, you know, she actually highlighted those issues. These are the guys that should actually come and tell us what really happened. In fact, the truth is that, you know, the level of insider dealing and the level of
market infraction generally, then,
you know, really, some people should really have been in jail, you know, for those issues. Because I mean, how do you? I mean, there was a regulatory failure over the period. There was a serious insider dealing, and you know, so really, that is where the capital market, this probe should really focus on, because
so you think they should have been the first to be, perhaps even the first to be spoken to?
Not necessarily the first, because I mean, the presentations that are being made by people they've invited are you know, they are germane to what is being discussed. But I'm very pleased that these guys are being called upon to explain to us what happened during their time, because it was really crazy. I mean, you see, in other markets we saw a situation where there was natural depreciation in shares and natural, you know, it was. What you expect, what we saw in other markets, you know, was normal.
No, especially the U.S. markets, there were a lot of market infractions. I know many, apart from the fact that many banks got closed up. No, there were a lot of, you know, insider dealings to very, you know, so many market infractions. Many people lost their jobs. Many CEOs, you know, lost their jobs as a result of that.
Yeah, but I'm not just talking about the American. It doesn't only the American market that was affected. You know, in Europe, in Asia, all over the world, the markets were affected. And you could see, you could explain some of what happened, you know, to a natural, the normal play of things in a market. But here we saw a situation where there was a lot of fraudulent activities, insider activities that have never been investigated, or even you know, where people are held culpable, you know, some sanctions, you know, being applied. So it is good that we are opening up those, because you see, otherwise, you see, the challenge in our country is the issue of impunity. When things don't go unpunished, you are really empowering others to repeat it going forward. So we must deal with that situation, explain what has happened, and like I said, if anybody, you know, is culpable for anything, you know, he should be brought to book, so that people learn that this is not a social club. This is not a town meeting. This is the nation's capital markets, and you cannot, you know, carry on with impunity and you know, get away with it. Now, so let's see what's going to happen when they do come come for questioning.
Now, going back to this particular list, some people argue that the people or the officials that came after these people, talking about the former CBN governor, the former NSE DG, and, you know, this particular list of people who have passed on, that the ones who came after them are actually the guys in quote who came to clean up the system. So perhaps if there are going to be questions, their crimes should be why they were unable to make the recovery faster than it is right now, and that in terms of all the infractions that went on that led to the crash, as it's called, those questions should be targeted at these people who are going to come. You know, you of that school of thought,
the fallacy that, you know, I've heard people say, okay, why hasn't the SEC or the CBN intervened in the capital market like it did in banks to save depositors' funds? What people forget is that investors are not depositors. it is a whole new, is a whole different ball game. Investors are risk takers who made investments knowing that there's a risk involved. Of course, there are a lot of uninformed investors who follow the bandwagon and got themselves burnt. So the kind of, I don't really know what could SEC have done? You know, they're there to regulate, monitor, supervise the system.
Ensure fairness.
And all that. Now, we can question whether they've done that well, but to talk about the issue of recovery, as if the SEC has failed to ensure the market has, recover. It is not SEC's role to ensure. No, there's nowhere in the world where the Securities and Exchange Commission can guarantee the recovery of the market. You have to understand that the forces behind the dynamics of the market are not within the control of
so you're saying
It's human behavior.
New regulations or instruments to deepen the market, all that the SEC cannot.
No, that can be that you can introduce measures to encourage improvement or to facilitate
of the environment.
Basically. But you cannot, people have held SEC responsible that the market has not recovered. And this is because of, like I said, the fallacy that the kind of intervention we saw where depositors are saved loss of their funds could be done for investors. It doesn't happen. We must understand that the dynamics of the capital market are very different from that of bank depositor relationship, and the kind of expectation within the banking intervention. There's no investor guarantee system in any way. It's only if you as an investor you go and take up an insurance for yourself to hedge your own. Yes, but there's no systemic way to actually prevent a situation where you have a boom bust cycle. It is just the way of the market, because it's based upon human sentiments.
We need to take a break here. Hold your thoughts for us. We'll be right back. We're taking a quick break now to continue with the program. I have been talking to Ehis Eyenyen. He's a financial analyst and CEO of Fares Consulting. We have been looking at the Senate ad hoc committee of House of Reps investigating the near collapse of the capital market. We'll be right back. Welcome back. You're still watching Business Morning, and we're still looking at the capital market probe into why the market has failed to recover, just like other markets across the globe. Ehis Eyenyen is still here. And now let's look at some of the issues that were brought up yesterday. Now, a number of persons spoke yesterday, and one person that was quite outspoken, he had a lot of time to talk yesterday. That was the president of the Society for Analytical Economics, Mr. Godwin Owoh. He mentioned or brought up a number of issues yesterday. Now, on why the market collapsed, he was giving his own personal opinion. He said that he blamed the collapse of the market on several factors, including a weak real industrial sector. He said a weak productive sector would not engender confidence in the market because the value of shares would not increase and people would not be willing to buy. He also faulted a weak, what he called poor monetary regulation and monitoring, perhaps by the central bank or the authorities in charge of that. He also faulted the act establishing AMCON, so many issues. But let's talk about why he said he felt the market collapsed. He talked about a weak real industrial sector. Do you agree with that?
Well, at the time the market was bullish, I think the Nigerian real sector was, I mean, we've always had a weak real sector, you know. So I don't agree with him that you cannot give that as a reason for the collapse of the market. I think the reason why, I don't even want to use the word collapse, you know, why we saw the bearish trend, which is...
the bearish trend that's persisted, because I think what's actually on the fore now is the pace of recovery of the market.
You know, but you see, what is driving that, like I said, is number one, the issue of liquidity in the market. You know, before it was easy. I mean, banks were, you know, the issue of margin lending and the fact that, you know, stockbrokers themselves, you know, could pump up prices and, you know, intervene in the market. You know, the issue of illiquidity, there's liquidity in the market right now. The issue of investor confidence. You know, especially where you've been burnt once, you know, they say once beaten, twice shy. You know, so we can understand those two sentiments, you know, and the fact that the global economy has still not recovered as much as it should have. You know, we remember that we have a lot of portfolio investments, foreign, you know, investors engaging our markets. You know, so why right now, I mean, we've seen their volumes go up. Not to the level we saw previously, and it's understandable because everywhere, you know, there's uncertainty everywhere, you know. But I wouldn't adduce the challenges in the market to anything about the real sector. Of course, you know, if the economy is booming and you know, there's employment, I mean, you know, people have more money and they can save, you know, incomes increase and savings increase. You expect that when savings increase, okay, people will invest, you know. But what the point I'm making is that there isn't, you know, we've had this challenge for decades, you know. So I'm using that as the peculiar reason for what we saw happen between 2007 and now. I really don't agree with that. But like I said, of course, it's always salutary if the economy is much better than it is, you know. But I don't think that there's anything peculiar that's happened in the real sector that has undermined the capital market. I think it's the question of the appetite of investors for investment in our capital markets and the sentiments that go with that.
Now, one of the issues that was also brought up yesterday was the issue of margin loans that, you know, brokers, some investors took in the market. Now, this is not new. This is something that even the lawmakers themselves know about. Some of them even, you know, were part of it. So, what is new? What will be said this time around in terms of, because they know what happened, how the central bank had to come in because the banks were affected, you know, clean up the financial sector. We know about the private placements where some investors got burnt, they didn't get certificates, and all of that went wrong. Infractions there were, some of which were dealt with. So while all of this will be put on the table, that, okay, this is perhaps one of the major reasons why the market collapsed, where would the lawmakers go from there if, you know, at the end of the day, it all comes to, okay, it was the margin loans or private placement, and perhaps the regulators didn't move as fast as they should have. Some people, you know, some market infractions were not properly dealt with. So where would that leave the probe? Well,
the end game from this, my own expectation about the end game of this whole probe thing is that, one, the uncovering of all that has been hidden that has happened in the last few years. Like I said, if there have been infractions and if people are culpable for underhand and even criminal activities.
These are things that the media has been reporting as the way, because when the whole thing started in 2008, all the infractions, the private placements, companies were names were named, you know, it was all out there. And I want to believe that the lawmakers, you know, they read the news, they read the newspapers, everybody was aware of that.
Well, you know, when you read things in the press, it's not like, it's different from when there's a deliberate investigation. For example, at the end of this, you expect like what is said to be happening on the fuel subsidy probe. You expect that the capital market will probably recommend people for actual investigation and prosecution if necessary. So this is what I expect will happen. You know, the fact that the press, you know, report that something has happened, that is not really enough grounds for the security agencies and the anti-corruption agencies to move in and deal with it. Although it raises issues and maybe they ought to have been proactive to investigate those issues. But I'm thinking that now there's a more structured way this is being done. And if the committee shouldn't just come up with a probe report that is filed away and then the drama of Washington TV is over and then that's the end of the matter. Let us, and then again, do they need to tweak the Investment and Security Act? Are there legislative solutions to some of the things we've seen? You know, so as they are legislators, this is what their business is. So I think that this is what they should be looking at. Is there any way they can improve the supervision of the capital market? Is there any way they can strengthen what the SEC is doing? And are there regulations that the SEC has not, even SEC itself, it should come out from this and maybe learn a few things as to what regulations they should put in place. So this is, this should be the outcome, a learning thing that is supposed to help the system. Now, if you permit me, there's something that Dr. Godwin Obo raised yesterday about the AMCON thing, which I think is something, I don't know if you're going to come to it, which I think was quite germane, because, I as of today, I'm not able to put my finger, because I've tried to inquire about this, on exactly how much has AMCON spent so far, how much of the, maybe the information I don't have access to it, or I've not been able to get it yet. But from what he said yesterday, he put forward the figure of 4.5 trillion naira. I was alarmed because, like he pointed out, if the budget of Nigeria is 4.6 trillion naira, I assume the situation where 4.5 trillion naira has been monetized into the economy, through AMCON activities. It can be. In fact, even the CBN itself, in one of his MPC meetings, the Monetary Policy Committee meeting, talked about the surfeit of liquidity on account of AMCON's activity. So do you think these bodies, perhaps both the AMCON and CBN, should be given a chance to come and perhaps for those who are in doubt or who are not comfortable with the figures or the money that's been put out so far, perhaps these bodies should be given the opportunity to come and explain why? I'm aware that the Banking and Currency Committee of the same Federal House of Representatives is also planning its own hearing sometime soon, because they've sent out invitations and all that. So even if this particular committee does not look into AMCON and AMCON's activity, I know that the Banking and Currency Committee is going to look into that, because the truth is that while AMCON has I salute them in the areas that especially in dealing with some of the non-performing loans, but we've seen a situation where you've not seen some consistency. There's a particular debtor, I don't want to mention the name because of there's a particular debtor who is a threat to the banking system today, owing well over 150 billion naira, and who seems to be getting away with his crime as it were. Don't you think that perhaps because at the end of this, AMCON is doing, at the end of the exercises of AMCON and the CBN, everybody, we all know it's all usually a matter of opinion. Everybody's entitled to their own opinion. I'm thinking that focusing, because some other analysts argue that perhaps focusing on all the good that has been done, because we talked about the fact that all of the loans that all went bad were a very serious threat to the financial system, and that we've come out of that. The banks are hopefully still lending, and that at least their books are not as heavy in terms of bad loans as they were before. So perhaps maybe we should focus on the fact that, okay, yes, some good still came out of that. Yes, perhaps it wasn't a perfect process. Some people got away with something they ought not have gotten away with, but of course, overall, some good has happened. But there's a question that Godwin Obo raised yesterday, the issue of what is this? AMCON is has a 10-year tenure, and with the kind of losses that have already been that have already been realized, losses that have actually crystallized on account of the fact that there's a huge discount on those loans. One is really wondering, how is AMCON going to, in 10 years' time, are we going to see AMCON's life being extended because it has not been able to, finish its work? So the thing is that the amount of money that AMCON is putting into the system, the amount of losses that are being made on account of those non-performing loans that is buying over is worrisome, because it's not clear to me, and it's not really clear to me how this is going to end up, because is AMCON able? Who are the investors in these bonds? Who are the investors in these bonds? How is AMCON going to as it were, unravel this at the end of the day? Because well, I guess that's there are a lot of questions that I want to answer. That's why I said that it is good that we see a lot more transparency on the part of AMCON, and I'm looking forward to what the banking and currency probe is going to come up with, because there are a lot of questions that are yet unanswered.
Well, I'm sure from that program,
we don't want to postpone
those questions
day,
will,
and
will
revisit it again.
Will be answered. Let's go back to the margin loans now.
Yeah.
Of course, the issue of margin loans, very key topic on the minds of stockbrokers. And I know that the representative of stockbrokers, Mr. Mike Itegbuje, yes, president of the Association of Stockbrokers, do you think the issue of forbearance will come up? The fact that this debt overhang that's still being, weighing heavily on the minds of investors will be brought up, and perhaps they might use it as an opportunity to push that.
You see, if you give forbearance, who is giving the forbearance, and who is going to bear the cost of that forbearance? If you remember that these stockbrokers went into commercial transactions, they went into legitimate transactions with their financiers, and if things have gone wrong, why would you want this? What kind of forbearance are you asking for? There's what we call moral hazard, a situation where you don't want a situation where market operators, market players, begin to be reckless or take on more risk than they should because there's somebody who is going to bear the cost at the end of the day. And I think that we should not be unmindful of that. So I don't understand what they mean by forbearance. If you
forgiveness of debt, as it were, I guess that's another way of
putting it. Who will bear the cost at the end of the day? Is it the Nigerian government? Is it the taxpayer?
Perhaps they want the same situation where the arrangement AMCON perhaps had with the banks, where maybe the debt will be bought over. I don't know what kind of valuation they will have.
So on the merits, on a case by case basis, because of the fact that most of those transactions should never have even been gone into. You see, that's why. It's really very. You don't want to reward people for recklessness. You don't want to reward a market operator for risk taking. That is, as it were, with all due respect, foolish risk taking.
Well, the banks did it. Some of the banks did it. So they're thinking if you had that if you give the banks, that extra leeway, as it were, extend that same hand of grace to us too.
So that's what I say on a case-by-case basis.
Okay.
Let AMCON, provide. AMCON can also take up some. In fact, it has the arrangement already that is supposed to handle that. So I don't understand in what context they're asking for special forbearance. Maybe we need some elaboration or clarification on that, because if it's to wish away what has happened and then allow them to go scot-free, who will bear the cost at the end of the day? That's what you must understand. You must understand that these are commercial, private sector activities. And, there are a lot of Nigerians we have over 70% poor Nigerians who have not. Is there any kind of forbearance for the average Nigerian on the streets on account of the recklessness? The recklessness of they will not be rewarding or rewarding and patting people on the back for reckless behavior. We must be careful, in how we do that, because this issue of moral hazard is a big issue. And except we have a situation where is free exit, free entry. If the business fails on account of your decisions, you carry the can. That's how it works.
Going forward, what are your general expectations? It's just the first day. It's going to last a week.
Yes.
So perhaps all those who didn't turn up, that were expected to.
Yes, we're expecting them to turn up. And maybe as it has become familiar now, we expect some more. Well, let's not hope it's not too. We don't see too much drama. But I think to be quite revealing to see, what the players in that era have to say. And I'm impressed with how Ibrahim El-Sudi has led the meet, at least as of yesterday. And if he carries on that way, I believe that, it's going to be quite, if anything, if it doesn't make any difference by way of raising the market, because I don't see how it will really do that. At least it will help us see how we got to where we are and avoid,
and perhaps how we can move forward also.
Well,
thank you so much. We'll have to leave it there now. Thank you so much for your contribution.
Thank you, Esther.
I have been talking to Ehis Eyenyen. He's a financial analyst and the Chief Executive Officer of Fares Consulting, and we have been looking at the capital market probe, of course, by the Ad Hoc Committee of the House of Reps, looking into why the market has failed to recover, just like other emerging market economies and advanced economies have been doing. We'll take another quick break now, and we'll be right back. Welcome back to Business Morning. Investors at the Nigerian stock market had been waiting with bated breath for the earnings of First Bank of Nigeria, and it came out yesterday. The company, or the bank rather, reported a 27.7% increase in gross earnings for the 2011 financial year. Yes, let's go over now to our earnings board to take First Bank's financials from 2011. Gross earnings came in at 296.3 billion naira. That's a 27.7% increase. Profit before tax also climbed 48.3% to over 50 billion naira, while its net profit, that's its profit after tax, came in up 53.5% at 44.7 billion naira. The bank is also proposing a dividend of 80 kobo, well, something for investors to smile about. First Bank has been reporting robust earnings in the last few quarters or so, and of course we do know that its first quarter results and forecasts for Q2 are also robust according to statements put out by the bank. So of course it's something we'll be tracking here, something for investors to keep their eyes on. Let's move on. We have Forte Oil from the petroleum oil and gas sector. The company reported weak earnings for the full year ended December 31st, 2011. Turnover came in at 111.9 billion naira. That's down about 11.8%. Net profit came in at 15.5 billion naira at 15.5 billion naira, while its fixed assets grew by 15.9 billion naira. Now that this is one oil company that has come a long way in the last 2 years. Forte Oil, formerly known as African Petroleum, in the last 2 years has been restructuring and rebranding to make the company more profitable. That's according to officials who were explaining, trying to give the facts behind this figures that was put out about 2 days ago. Company said it's paid out about 6.4 billion naira as severance packages to some of the staff that had to be laid off. It said it inherited a debt of around 26 billion naira, and that it's cleared out that debt, and the company, or rather investors, can now look forward to a more profitable company in the coming years. That's something for investors to think about also. That's about all we can take from our earnings, but we do have more earnings that were put out there talking about Custom Street. We'll be tracking more of them for you as we get them. We'll also be tracking the dividend list, of course, those companies that have put out proposed final dividends to reward their investors. That's about all we can take on today's edition of Business Morning. Thank you so much for being a part of it. Channels News Track is at the top of the hour. Estelle Bodaga. Bye for now.